Hey, it's Morgan King from Morgan King Real Estate Group, and I'm putting together a quick little video for those of you who are planning to purchase a home at some point in the future, and you're kind of like, wait, what? How do I financially prepare for something like this? Specifically in San Diego, you're looking at around $700,000 for average detached home price. Most people can't just walk into that without preparing in advance. So I want to walk through a few things you can do now so that you're prepared for that purchase in the future. So the first thing is your credit score. You're going to want this to be around 740. This will give you the optimal interest rate for your mortgage. So whatever you got to do to work that out, there's a ton of resources online. Honestly, just Google increase credit score and there you go. Just to keep this video concise. The second thing is saving. So there's a lot of saving involved. You're going to want to save for your down payment. You're going to want to save for your reserves, and you're going to want to save for your closing costs. Now let's break those down. Down payment, you want that to be 20%, but if you can't get there, you can opt in for lower percentage rates. You can talk that through with your mortgage loan officer or broker. There's a ton of different options, but keep in mind, anything below 20%, you're going to be paying private mortgage insurance, which is generally around a half of a percent to a full percent of the purchase price of the house. This just eliminates the liability for the bank to loan you those extra dollars. So try and get it up to 20% if you can. Otherwise, look at with your loan mortgage officer to identify what makes the most sense for you. So that's the first savings. Second savings is closing costs. Now this can be anywhere between 2 to 5% of the purchase price. So this will happen while you're purchasing the home. Closing costs, you'll have to have that money up front. And then the third thing is going to be your cash reserves. So PITI is principal, interest, taxes, and I always forget the fourth one, insurance. So that's basically your monthly mortgage payment, like how much it costs for you to stay in your home for a month. You have to have at least 2 months of that in reserves, in addition to your 20% down payment, or 10% rather, in addition to your closing costs. So lots of savings there. And then the final thing is obviously getting pre-approved and understanding what is that you can afford. Now, keep in mind, when your mortgage lender or broker provides you with a number, that doesn't necessarily mean that you can afford it. It could be the number that is at the top where you wouldn't be able to go out to dinner anymore. You can't buy fancy clothes. You can't go on trips. So depending on your lifestyle, you want to get pre-approved as soon as you can once you have you're getting serious about purchasing, so that you can really map out like what's realistic for your monthly budget for your home. So I hope you found this useful. I tried to keep it as short as I could. If you want more information or have any questions on this, please reach out to me. I would love to support you on your buying or selling journey, and we'll talk soon.